the best indicator to show the chaos and opportunity for you in your portfolio just created by the Fed is probably just this one thing, and you might want to write this down. It's the odds of a September rate cut, at least according to Winston down there, who does all the Fed research around here. There is a clear dovish bias, as in they want to cut, in the FOMC statement just out, which meant the market was suddenly expecting more rate cuts this year, which brings stock prices higher. But then the Fed chair, Jerome Powell, came up and he kind of ended that party. Why? Well, while the dot plot is clear on the fact that the Fed wants to cut, the statement by Chair Powell underlines that there is a schism, whatever the word is, at the Fed. And we have something that hasn't happened for like more than 20 years. Two governors, Waller and Bauman, voted to cut, which is what I was saying they were going to do. That's the first double descent of that nature since 1993, right? So when Britney Spears was still a thing, something like that, right? And I'm going to tell you here in less than 2 minutes my take on how this affects your stocks and where the big opportunities lie here. But first, let me ask you this. Are you confident you will take full advantage of this bull market? And are you confident you know how to hold on to your gains when the next market crash inevitably comes unannounced? If you are just a little uncertain, and just be honest with yourself about that, just put how you're feeling about that in the comments. I'd love to see it. Certain, uncertain, not quite sure where I am. And if you are just a little uncertain, then come and join a free live training on just that with me this Saturday at 10 a.m. New York time. And I will teach you how to make the most of this bull market and, even more importantly, how to automate your risk management so that the next crash won't hit you like the last one. Remember, just February, for example, felt pretty nasty, right? Now, how do you sign up for that? Well, it's completely free. We've got 1,000 spots free, and that's at felixfriends.org/training. There's a link down below in the description. But let's get back to value and facts. When Powell poured cold water on the rate cut bias during the press conference, he said this: current policy stance appropriate with inflation risk. And then he also says, inflation is further from our goal than employment. Now, that's actually nonsense. Inflation is 0.5% closer to Powell's goal than it was last September when he cut by 0.5 percentage point. So, nevertheless, Powell's comments smashed 2025 rate cut expectations down to just the one cut, and maybe another one. But 2026 rate cut expectations rose. And if you realize that the market is forward-looking, you know that's a big, beautiful, shiny thing if you're set up for it. The Fed also tweaked their statement and they removed one word. And it sounds ridiculous that we're talking about one word here, but in reality, the market really cares about this. They removed the word diminished from its comments about uncertainty. So apparently there is more uncertainty now than there was at the last meeting, which is just a crock of, well, I was going to say something, merde, French, nonsense, because the geopolitical risk is now lower, right? War in the Middle East is off the table, more or less. The trade deals are coming in hard. Europe, which is the biggest one by far, right? The Koreans just announced one. So the global trade policy uncertainty is significantly reduced. We have extensions with China again and again and again, not implying that there isn't going to be like 100% tariff on China. It's going to be much, much less. And they wanted a deal. So uncertainty is dramatically lower than it was when the Fed cut 2 times around election time and 2 times just before that. And it does make you wonder, is this Fed just biased against the incumbent of the White House? And I'm neither Democrat nor Republican. I don't have to be. I'm not American. I just take whoever you guys elect as the president and I have to deal with it in my portfolio. But it is very, very odd that based on the data alone, the data was way worse last autumn and they cut. Now the data is way better, way less uncertainty, and they're not cutting. It's kind of odd. But it opens up a big, beautiful opportunity for us, as I mentioned at the top of this. And where is the big opportunity? Well, what stocks move the most when interest rates come down? Non-profitable tech. Yeah. The risky basket case type stocks. ARKK being a very, very good basket of that basket case. And if you look at the stock right now, it is still down 52% from its 2021 all-time highs. Buy and hold, they say, right? Yeah, you would have missed out on like massive rallies and pretty much everything else. So first of all, join me Saturday and I'll teach you how to never be in that thing again, because I know most people are harboring something in their portfolio that's down more than 50%, and that's avoidable very, very quickly. I'll teach you that in literally just a couple of minutes. But I actually like this, and I was buying one of the sister funds, ARKW, a little while ago. That one's gone up quite a lot, but ARKK still hasn't gone up that much. And I do like it. Now, I'm not telling you obviously to buy it if you come to your own conclusions and your own research and so on. But where would I buy it? Well, for me, there are basically two options. If you're really conservative, you buy it up here at about $79. Why? Because that would be exceeding all the previous highs. If you are a little less conservative, you'd buy it at the highest close. Again, I'm not telling you to do that. I'm just saying those are the sort of things that I look at, which would be at 77, 75 basically, or you could buy it where it is right now. But there is a chance, as you can see, that this thing pulls back. But there is a positive here, and that is it has actually been on a very, very, very nice upward trajectory. It's just going a little bit sideways, a little bit of consolidation there. But when those rate cuts kick in, and that could be late in the year, that could be 2026 when Jerome Powell gets replaced. So you might need some patience for that. So I'm not saying you need to buy this right now. In fact, I'll never tell you what to buy. I'm just giving you some ideas that I look at, and then you can obviously come to your own conclusions. And risk management is the key with something like this, because this is a volatile beast. But the potential upside here, it isn't the 50% that it's still down by. It's 100% or something. If you go back to the all-time highs, if you just go back to sort of October 2021, it's still a 64% run up, and that makes some sense. Now, the second sector I would look at and keep a watch on, and maybe just add it to your watch list, is FinTech, because FinTech stocks also get hammered when interest rates go up, which is why this happened here. So this is a FINX, FINX. It's an ETF that tracks the FinTech sector, still down 35%. So it also gives you a potentially pretty significant upside opportunity. And what I particularly like about this is that we have just taken out the December 2024 highs here. So that's quite positive from we're basically at those levels, slightly above those levels. So again, if you know me and you want to know more about how I trade and invest, which is based on what I learned from my mentors who are Wall Street guys, then, as I say, join me on Saturday. But I would probably look for a breakout above the recent high here, which would be at about 35.60 or something like that. Again, not telling you what to buy. But I think there's some real opportunity here going into the second half of the year as rate cuts become a thing, because we're now expecting a lot of rate cuts in 2026, not so many in 2025, which is surprising. And I think it's nonsense. It makes absolutely bugger all sense. But there we are. If you got some value out of that, join me Saturday, felixprehn.org/training, and I wish you a tremendous week. SoFi just reported massive beats on revenue, on profits, user expansion, segment diversification. They raised 4-year guidance, strategic pushes into high crypto areas like crypto, and then they dropped the bombshell the market didn't see coming. That was Winston's face when I read him the following email that I got from SoFi, which says what? They have offered shares, $1.5 billion worth of shares today.